Welcome to Wyckoff Power Charting. I am Bruce Fraser and I am your host this week. Roman Bogomazov is on assignment. So, one quick announcement, please go to tsaasf.org and have a look at this wonderful not-for-profit organization that's oriented towards technical analysts and technical analysis education. There is a recent webinar recording with Joe Turner where he talks about the 2019 outlook with his business partner Martin Prang. They will continue with part 2 in February, and you are invited to attend. We are going to talk about sector analysis today. This is a continuation of our episode from last week where we talked about combining the relative strength analysis with the price analysis to identify leadership sectors or leadership industry groups, leadership stocks, and also laggards that we should be avoiding. So do have a look at that. Here we're going to look at sectors. So, but first, let's take a look at the some point figure analysis. This is short-term trading analysis. This is 5-minute data, 3-box reversal method, and ATR scaling. And if you look at the, let's do a highlighter here. And if you look at this area right here, there's a very nice count into the end of the year. This particular chart was constructed on December 31st. And so you can see that it had a wonderful count, objective trading count, strictly for traders, that went up to 23,744, 24,281. Now, this is an intermediate objective. There is a higher objective up here, much higher, and we will consider that objective once we have absorbed the current point figure analysis objectives, which is right in this area here. Notice this, the recent high in the Dow Industrials is 24,288.61, which is almost a perfect hit to the high objective of 24,281.60. And so now we would expect that if this point figure count has been constructed correctly, that we should have some kind of a pause in this area, and hopefully this pause produces a reaccumulation, which can take days to weeks to complete, and this would give us another leg up. And so we need to see what this looks like, but so far this point figure objective has worked quite nicely, and here we are right at the top of this objective area. Okay, so now let's look at the NASDAQ comp. NASDAQ comp, this is a similar chart. This is 10-minute data, same construction, 3-box reversal, ATR scaling, intraday data, and we have a count here, and this count gives us an objective up to this area that we're in right now. And you can see here that we have slightly climbed over the top of the objective with a little bit of a climactic surge, and now there's an attempt to come back down into the count area. And so we would look to, again, as with the Dow, look for some kind of a reaccumulation that would produce the potential for another move upward. And the other thing I want to point out here is notice this trend channel. Really nice trend channel. The points for construction are here and here for this line, and then here and here for these overbought line, and you can see that we've gone right up to it and touched it. And so we will be very curious whether this produces a larger bout of weakness that could take the market back down to the bottom of the channel. And so this will be an interesting time in the next period, next week or so, where we see whether or not the market wants to consolidate the recent gains that it's made. The only other point to make here is that there is a larger count, as there is with the Dow, and this larger count will come into play potentially after we've had a reaccumulation or possibly a distribution, small in size, of course, that could come back down to this area where you could have a secondary test. And so that would be not unexpected if we had that happen. Okay, so here, let's talk about industry or sectors. There are three correlating charts here that we can look at and combine their analysis together for identifying best leadership by sector. And of course, you could do this analysis with industry groups and individual stocks too, similar to what we did last week, last episode. You can see up here, this is consumer discretionary, XLY. Consumer discretionary is a chart that you can see during 2018. This is weekly data. Went into a consolidation, had an upthrust into the end of the third quarter, and then really had a sharp decline thereafter, as did all the other sectors. And so we're going to look at a number of these, and we're going to go pretty quickly. But there's some concepts here that we can use for our selection process. So in the case of consumer discretionary, it looks not so good. You can see here that it broke the 39-week moving average, broke it decisively after consolidating for a number of weeks, and then had a very sharp break that went down through the lows of the trading range. But notice this, it had a pretty good rally thereafter. So now when we look at the relative strength, this is a interesting addition to our analysis and can be an arbiter of where leadership and where the laggards are. Well, notice this, that there's a really nice uptrend that formed in late 2017 in consumer discretionary, nice uptrend, and then with the decline that came at the end of the third quarter 2018, it returned back to its 39-week moving average on relative strength, consolidated there, and then turned back up. And notice this, that in December, in the month of December, when the market was quite weak, actually consumer discretionary relative strength was walking uphill and showing leadership to the market as a whole. And so this is an important tell for us. So even though this looks bad on a relative strength basis, we still have an uptrend and we have leadership in December when the market finishes its low, kind of a V bottom, and then turns back up. And now it's almost back up to the January 2018 highs. The other thing that we want to look at is let's look at point and figure. This is just a standard point and figure analysis. This is a one box reversal chart and we're using 2-point scaling. We're using user defined here because we want to keep the scaling consistent because it changes. Under 100 it's 1 point, over 100 it's 2. So because most of this analysis is over 100, we're just going to select scaling of 2 point. Now we take a count. This count here is a shorter trading count, 10 columns. 10 columns times 2-point scaling gives us 20 points. It goes right down into the range of this count and then turns off of that. So this would have been a really good indicator of how much potential there is for decline in this consumer discretionary sector. The other thing to look at is look at this much bigger count. Now this is actually potentially worrisome because if this is all distribution, then we have the potential for further decline. But right now, our mission is always to take segments, and so we're taking the first segment of this count, and this first segment has been fulfilled, has reversed, and is showing leadership to the market. So we can find a number of leadership type industry groups and stocks in consumer discretionary. And so this is certainly one of the areas that we want to focus our attention, drill into, as we talked about last week, and look for the leadership. Okay, so now let's look at consumer staples. Consumer staples has a somewhat different look to it. So you can see that it has a very big, wide trading character in 2018. Here's the January peak. Here is actually a May low. So this was much weaker than the market. Now look at the relative strength. Relative strength has been in a downtrend in consumer staples since 2016. And so this is a very long-term underperformance by this sector of the market, and has been an area that we want to generally avoid. I'm sure there are some good leadership names in staples, but it's an area to generally avoid when you have a big downtrend like that. But look what's happened. So now we've consolidated in 2018 underneath this downtrending 39 week, and then we've had a nice bounce. This bounce showed leadership, and you can see this really good rally that's occurred to a lower high. And again, this doesn't, the price chart doesn't look so great because of the general nature of the way that the market is acting. And so a lot of volatility, but notice this, we are now have rallied in relative strength above the 39, turned the 39 up, and now it's pulling back to the 39 from above. And so this is a potentially compelling emerging leadership situation. Looking at point and figure, we take this count, that this trading count, which is this area here, and this is this area here. You can see we have 7 columns, declined down to the area of $49. It went right to that area and has now turned up from that. One caveat is that staples in the month of December, the relative strength has been declining. The price chart is rising, but this means it's rising at a lesser rate than the S&P 500. And so we would want to see, after coming back to the 39 week from above on relative strength, we want to see it then begin to rally again to show that it is important leadership. Okay, so here a slightly different picture. This is energy, XLE. Energy is very interesting on a couple different levels. One is, again, like the staples, notice that since 2016, late 2016, energy has pretty much been in a downtrend. Attempted to rally here in early 2018, but then failed again. And you can see that since the middle of the year, 2018, that relative strength has been declining and downward. So notice that what happened as the market became weak is, notice energy declined very rapidly, and this really was from the indication of relative weakness that showed up beginning in the fourth quarter. And so the relative strength did a nice job of telling us that this group was a laggard. The result of that indication was that we had a significant bout of weakness in price. Now let's look at the point and figure. This point and figure is fascinating because we have 2 counts. We have a count up here of 20 columns across this area, which is this area right here on the price chart. And that count takes us down to this 57 to 54 area, and the decline goes exactly right to the count area. And so this point figure count was quite good. Then there's a redistribution count here, and this redistribution count counts exactly to the same area. So this is a stepping stone redistribution count. And so they equal each other, and now we've had a nice turn upward off of these 2-point figure counts. It's a little too early to say that energy is going to become leadership. We really need to see the relative strength line climb above its 39-week and turn up that moving average. But we can see that there's been a reasonably good rally off of the lows, and these lows was the area of those 2-point figure counts. And we can see that there's been a change of character in the way that this rally has bounced. There is a turn up off the relative strength low that took place in mid-December, and there is a rise in the relative strength, which indicates that this rally here has been slightly better than the S&P. Could be an early clue. We need to see more. The other thing about point figure, and this is very important, is we see that a cause was built that produced a decline. Then another cause was built that produced a decline. They both confirmed each other. Now we want to see a cause build for a rally, so that energy itself can build a point and figure count for an important move upward, and this has not yet happened. Now, there are individual energy stocks that are showing some leadership qualities, and so you'd want to go in and use those schematics from last week and use these schematics to be able to find those leadership names. Okay, so financial's important. So XLF, we can see here that there was great expectation in early 2018 that the financials were going to be leadership. Well, notice this. Let's go back and look at the area of the relative strength, or actually let's start with price, and we can see here that there's a beautiful uptrend in financial going back to early 2016, and notice that the relative strength is climbing upward. You can see it's above its rising 39-week moving average. Even here, there's pauses along the way, but these are actually good buy points where it pulls back to a rising 39 on the way up. So this is an in-gear situation, price and relative strength. Looks great. This is a beautiful uptrend. This is what we're looking for in campaign trading. Now, what happens in 2018 is that we have what appears to be distribution, lower highs. A high in January, lower high, right here, lower high here, and signs of weakness on the way down. So this is a very weak looking chart. Now, the arbiter of whether it's weak or not, because we can see that sometimes the price chart can look kind of volatile and weak, but the relative strength is rising as it did with consumer discretionary. But here, notice what's happening. You have a decline in the relative strength, and this says that financial stocks as a group are lagging. They have now gone from leading to lagging, and we have in both the relative strength, which turned down first, turned down right about here, and the price chart, which turned down right about here. You can see that there's impending weakness, but notice this, right here at the 39-week on the relative strength, there's an attempt here to go up, knock on the door, and try to get above the declining 39 and look at the relative strength in December. It's rising. And so this could very well mean that relative strength and price on financials is going to improve after this sharp breakdown. But it's a very, very early situation where we really need to watch closely what happens from here, because there is the potential for this relative strength line and the price line to just turn down again and just resume the ongoing weakness that it's been suffering through all of 2018. So point and figure, you can see that there's a 13 column count here. It gets within one box of fulfilling that count. Then it's turned up, a little bit of relative strength. And so this could mean that we're going to have a more important rally in XLF. But again, we're concerned about the ongoing weakness. Okay, healthcare. Now, healthcare is one that we're really interested in, because notice the relative strength back into 2016. It's actually relative weakness. And so you can see that generally the relative strength has been declining through this period, even though price is in an uptrend. But what this says is the market's been climbing faster than healthcare has been climbing for the most part. Well, now all of a sudden in 2018 we have this consolidation here. Looks like a big accumulation area in relative strength. We have an accumulation area in the price chart around the 39-week. These are both producing a situation where healthcare can become leadership. And notice this, in the second half of 2018, healthcare sector stocks have been performing better than the market as a whole. A top was built here. A count was built. This is a trading count, one box reversal, so we're not looking for big moves. We're just looking for trading type moves. You can see here, this is the area that we're looking at in late 2018, and this comes within one box of fulfilling that trading count objective at 81. It goes to 81. The count went to 80, so that's a really good count. So the expectation is that healthcare continues to be leadership, even though this chart has a lot of volatility in it. The thing is that notice in December, healthcare relative strength is now in a decline, but from way above it's rising 39. So it could very well be that the healthcare sector may need to have continued relative underperformance till it gets to the area of its rising 39 before it can start another important uptrend. But this trading price count has been fulfilled. So this looks pretty compelling. We want to be opportunistic in finding the right time and the right leadership stocks to identify and participate in. But healthcare looks like leadership. The industrial sector is really interesting because it was important leadership since 2016. Beautiful uptrend throughout, climactic surge right at the end, as we would expect. And then notice this, right across this area, it has an attempt to upthrust the highs in January. These highs in January are turned back the industrial sector price, and it goes back down. But notice this, XLI goes from being leadership on relative strength into the climax to then becoming a laggard. And so right about here is where you turn the trend down in XLI on relative strength, and this is about mid-year 2018. Attempt to go up one more time, but it's now in a confirmed declining trend. This rally in the second half of 2018 actually just rallies up to the 39-week and is turned back down from there. And so now the industrials look like an extremely weak sector. Look at the extent of the decline off of the September-October peak. So the weakness, which shows up on relative strength, really shows up in price, and the price just has an extreme decline, extreme bout of weakness, and you can see that the relative strength has just continued to demonstrate that. Point and figure, we have point and figure trading count here, the light blue line, which went down, missed the count objective by one box. And so now it's attempting to turn up, and the relative strength has turned up just a touch on this bounce. And so, but industrials, we continue to see them as being weak until some kind of an important accumulation causes build in point and figure and also in relative strength. Okay, we have time for one more. Let's look at the materials. I'm going to go quickly through this so I can show you the other charts. But here's XLB, beautiful leadership uptrend, climax in early 2018, January. You can see that the rate of advance, not maybe quite as dynamic as some of the others, but it is up and it's above a rising 39. And then look what happens. It just breaks down in January, February, consolidates that, turns down the 39, which the relative strength turns down first, which is a huge warning when relative strength goes into a confirmed downtrend. And then here is where the price has a confirmed downtrend. And now look at the weakness that followed. Relative strength is down, price is below its declining 39, and this group just fell down and out. Remember how industrials went back up to the highs of the January peak? Not the case here with materials, which made a lower high and then had important weakness thereafter. Point figure counts, the first count has been hit, went right into the middle of it, so it's possible that there may be a bounce of some sort. And also, let's just make a note that since October, the materials sector has been attempting to rally. And so, not that it would cause us to be bullish on the group, but this may be an early sign that the group wants to stop leading on the way down. A lot of data is needed before we'll know that. Technology, again, I'm going to go through these quickly, but technology is important. Just now below a declining 39 on relative strength. You can see a big bout of weakness in price off of its peak. It was leadership through 2018 and then just all of a sudden turned into important relative weakness. Point figure count, the counts objective has been met. We can see here that in November, December, that there's been a pause in the XLK decline in relative strength, but it's not rallying. It's not showing any strength at all. Okay, utilities. Utilities are in an uptrend. Look at the relative strength there, and they've pulled back on price to the 39. Here, real estate, and this will have to be our last. Have a look at real estate. The relative strength trend is now up. This is an interesting one. It came within one box of fulfilling these counts. And we are done for this week. And I hope you enjoyed this, and we'll see you next time. Take care.